Hello, welcome back. Time now for business news, and for that I'm joined on set by Catherine Nicholson. Hello there, Kat.
Hello.
All the talk, of course, is of this ominous fiscal cliff in the United States.
Exactly, and that deadline is getting closer and closer. US politicians back at work today, very rare for them to do so, to try and get an agreement before the end of the day. The talks restart at 5 p.m, so they're all in their beds, but probably not getting a very good night's sleep, that's for sure. Now, we've heard all about this in the news. They need to make some agreements about the budget. It's about tax rises and spending cuts, a total of around $600 billion in all that they need to agree on. If they don't agree on the changes that they want to make, then tomorrow morning automatic changes come in, and people are predicting this would have a very bad impact on the US economy. Let's take a look at a report by Catherine Viette.
As U.S. politicians engaged in a game of brinkmanship, the president remained hopeful that a deal could still be struck.
Democrats and Republicans both say they don't want taxes to go up on middle-class families. That's something we all agree on. If we can get that done, that takes a big bite out of the fiscal cliff. It avoids the worst outcomes.
The squabbling is over how to avert the so-called fiscal cliff, a series of spending cuts and tax hikes that are due to start on January 1st.
My big worry is a contraction of the economy, the loss of jobs, which could be well over 2 million in addition to the people already on unemployment. I think contraction of the economy really would be just terrible for this nation.
If no deal is reached by midnight on December 31st, more than $500 billion in tax increases will begin to take effect, along with $110 billion in spending cuts. These include reductions in the defense budget, the end of a 2% payroll tax cut, the end of long-term federal unemployment benefits, which immediately affects 2 million people, inheritance taxes to rise from 35% to 55% on properties worth more than $1 million. While the cuts may not spell immediate disaster, many economists worry the mandatory measures could send the U.S. back into a recession.
If the fiscal cliff hits in all of its fury, if there is no compromise whatsoever, I do think you'll see a contraction here in the equity markets and a lot of the commodity markets as well.
The uncertainty is also causing jitters in the markets as some currency investors move away from the dollar.
All right, Kat, there's all this talk of what might happen if we do go over the fiscal cliff. I mean, what are the consequences in reality?
Well, the consequences for the economy could be pretty bad. People talking about the United States going back into recession. Obama says, though, before we get to that, he wants to talk about a sort of a sticking plaster fallback plan, which he would try and force a vote on and say, listen, we really have to do something. Take this as an interim measure, at least. You can see some of the measures there. Continue tax breaks for some of the less well-off families in the United States and extend unemployment benefits for 2 million Americans. In terms of economic consequences, though, in the long term, if people have these tax rises, they have less money in their pockets, so they're not spending money out there on Main Street. That impacts on businesses, it impacts on manufacturers, and it will impact on jobs. So we're seeing economists predict that unemployment will go right back up again over the 9% mark, which it's been coming steadily down from in recent months. And one economist from JP Morgan has estimated that more than $550 billion could be sucked out of the economy.
It's a harsh figure to swallow, hey? What about investors? How have they been reacting?
Well, yes, we can already see on the investor reactions on the markets that we've had today. We've seen currency investors moving away from the dollar, euro and the yen both strengthening against the dollar. And the Australian dollar in particular is being the safe haven that investors are moving to. And it seems like the Australian dollar has much to gain from a continued deadlock.
Well, talking about that deadlock, didn't we see a similar situation last year?
Yes, it is a little bit deja vu, isn't it? We were talking about the debt ceiling in summer 2011. There was deadlock between the Democrats and the Republicans over raising the cap on the amount of debt that the US government could get itself into. Now, that debt is currently standing at around $16 trillion, a not inconsiderable sum. a lot of the decisions that they were meant to make then, they passed on to today, this deadline. And we can see that once again, it is going right up to the wire. So never pass your decisions on to the future. Make your decisions when you can. Yeah.
Okay, well, let's get some more detail on the market reaction, Kat.
Okay, yeah, so European markets just opening up for the last trading day of the year, and we've seen that the fiscal cliff is impacting there. We've got some red there in London and in Paris. Frankfurt DAX is closed for the day. In Asia, the fiscal cliff has also been weighing on trade there, but we've had a mixed picture overall. You can see lots of green. That's partly because there's been some very good manufacturing data in China. In fact, the highest level in 6 months for mainland Chinese shares there. We've got to remember that many markets are closed for all or part of today for the New Year's Eve holiday. Mentioned Frankfurt, also Tokyo, Milan and Sao Paulo.
Okay, well, over here in Europe, German Chancellor Angela Merkel has a less than happy New Year's message for us, apparently.
Yes, well, we've all been distracted by the fiscal cliff. The Eurozone crisis has not solved itself, unfortunately. That would be a nice Christmas present. Angela Merkel's going to be speaking in a pre-recorded New Year's Eve message going out later on. And she's going to say the Eurozone crisis is far from over. The roots of some of the problems are starting to be healed by some of the measures that have been brought in over the last 3 years. But she says Germans should expect a tougher economic climate in 2013. Now, what's interesting is this actually goes directly in the face of what her own finance minister says. Wolfgang Schäuble has told Bild newspaper that actually the worst of the crisis is over. So they're going to have to talk to each other about this.
They clearly are. They need a chat, don't they?
You do.
Okay, well, let's head to South America. And 2 big Spanish-owned energy suppliers have been nationalised by the Bolivian president.
Yes, quite a drastic move by Evo Morales. He says that these 2 companies owned by Iberdrola, which is a Spanish company, have been overcharging rural customers in particular. People living in rural areas paying as much as 3 times as much as people in towns and cities. He's signed a decree now which has brought them under state control so he can sort out those pricing issues. It is a drastic move, but it seems to be fairly amicable for the moment. Iberdrola saying, well, we hope that we get a fair price from Bolivia, and Bolivia saying, yes, we hope to deal with this in a business-like way.
Okay, well, it is, of course, New Year's Eve, Kat. Many people are going to be wanting to text their friends to wish them Happy New Year, but this is a problem for some.
Yes, and here in France, we've seen all of the phone networks. They're stopping their regular battles over prices and packages and things, and they're working together to make sure the phone networks don't crash on New Year's Eve. Last year, on December 31st, 1 billion text messages got sent. That's 20% up on the year before. So if that increases again this year, there could be some pretty big problems. So they're all working together, extra staff being put on. They're going to slow down how long your text message takes to be sent. It's usually 5 seconds. They're going to slow it right down to 10 minutes to try and ease things out on the network. So you should still get your text messages, but maybe a little bit later or even tomorrow morning.
Better late than never, though.
Exactly.
Thanks very much, Kat. Catherine NICHOLSON, our business editor there. That's where we leave it for now. Stay tuned to France 24.